Hi, welcome to the first day of tutorials for the Market Top and Bottom Finder by Absidy LLC. Today, we're going to explore how it works and a strategy for it, so let's jump right in. We're going to start right off with an example from stock trading. Here we're looking at the 1-second charts for Tesla at the beginning of September 2019. You can see several areas that are highlighted in red. These are where the market top and bottom finder is anticipating a market bottom to be forming. And you can see this area in green. This is where the Absidy LLC's market top and bottom finder is anticipating a market top to be forming. All of these lines form in real time, so what we're looking at on the screen was actually what we were going to get during a real day of trading. The top bottom finder by Absidy LLC has just a few settings that you can adjust to your trading style. The first thing you can control is the sensitivity of the code. Now, when the sensitivity is set very high, you have very, very large and long-term opportunities. When the setting is set very low, you have opportunities that are going to come all over the charts. We'll look at this example in more detail later. Right now, we have the sensitivity set rather high at 5. Because we're trading the 1-second charts of Tesla and only want longer-term opportunities on our scale of 1 second. Next, we have signal quality. This is something we're going to explore more later too in examples. As you turn this value up, it's going to try to weed out as many signals as possible, only leaving the top of the top of the top or the bottom of the bottom of the bottom. If you change this value, you will notice that some signals that were forming are no longer there. And by doing so, you can rate the quality of the signal that you have. If it continues to be there while the signal quality is increasing, then you know you have a higher quality signal. Lastly, we have a double highlight option. This is a new hybrid technique introduced into the top and bottom finder indicator. The way that it works is that when you turn this option on, areas that are currently red will also be highlighted in light red if they are areas of special interest. Likewise, where areas of market tops that are of special interest will also be highlighted in extra light green. Then, just enter the security code you were given and hit OK. If there are any issues about installing this indicator on your chart, please refer to the video where we show you how to install an indicator and how to save the security code that you were given. In our next example, we're going to look at the 4-hour chart for the dollar versus the peso from the beginning of 2018 to the middle of 2019. You can see here again that the red areas indicate a potential market bottom forming, while the green areas highlight a potential market top forming. All of these signals are in real time. None of this repaints, and it is completely lag-free. The settings that we're using on this are a sensitivity of 3 and a signal quality of 2 with no double highlights. The sensitivity of 3 is lower than the sensitivity of 5 that we saw in the last example. This means that we are seeing more opportunities for trading at faster paces. Now, the most common strategy that has been used with the top and bottom finder is to use it with some sort of triggering mechanism, preferably a lagging indicator like a moving average. When it's simply green or red, it's not good enough to know that you should be buying or selling there, but you know that that's a very high probability area of a market top or bottom forming. That means that whatever signal you get from another indicator in those areas is exceptionally more powerful. In this case, we're going to look over when the price crosses the 20-period exponential moving average in blue. Starting on the left in April of 2018, you can see that we had a market bottom forming in red. Then we had a crossover of the 20-period EMA. That was an absolutely incredible buy signal that entered with almost zero drawdown. Next, we had green areas forming, alerting us of potential market tops forming in real time. You can see the first area where the price was crossing under the blue 20-period EMA. This signal was a little early. However, with the proper risk management systems, the losses here would not be very big. Next, you can see the second opportunity where it's highlighted green indicating a potential market top forming in June of 2018. Here, price is closing under the 20-period EMA, giving a very good short signal that is validated by our top and bottom finder. If you entered a short position here, you would have a lot to gain. Then, again, we have red areas forming from the top and bottom finder, showing us that we should go long here. After we cross over the 20-period EMA, that is our long signal. That got us in right at the market bottom at that area. Now, if we want to wait to exit, we can wait for the next green area, or we could have simply exited when we were satisfied with our profit taking. Next, we had a market top forming in November of 2018 in the green area. You can see that in this area, there was a lot of back and forth movement around the 20-period EMA. However, there was only one area that was highlighted by the top and bottom finder as the market top. This means that there's a lot of opportunities to go short here. If you chose any of these opportunities to go short here, you would have been in good profit into 2019. Again, right in January of 2019, we have a long signal, where the price crossed over the 20-period EMA while it was in the red zone of the top and bottom finder. However, this did not amount to too much, and profit taking was scarce. Then we have two more long signals where price crosses over the 20-period EMA while the top and bottom finder is signaling that the market bottom is forming in the red areas. Next, here's an example of the 4-hour charts on gold from September of 2017 until the beginning of 2019. We're using the same settings as we did last time, with a sensitivity of 3 and a signal quality of 2. Now, a lot of gold traders might not be satisfied with how infrequently the top and bottom finder gives signals on these settings. To adjust this, simply decrease the sensitivity to 1 and decrease the signal quality to 1 and check double highlights. This is what the chart looks like thereafter. You can see that we have a lot of opportunities forming all over the chart, giving us many potential setups every week. If we want to explore our opportunities even more, we can check the double highlight area. This will select areas of market tops in bright green and areas of market bottoms in light red as high probability areas where a potential reversal might happen. Again, nothing is certain, but these areas are higher than just simply looking at the red and green areas as they were before. Just look at this chart for a moment and see all the opportunities that it points out in addition to the 20-period EMA. Many people who have been using this indicator have been very happy with using it with the moving average, but there's a very special moving average that's on TradingView that you can use that will enhance your profitability significantly more with using this method. To find it, simply go to the indicator section and search for Best Holy Grail Indicator version 3 by MCBW_. Using this moving average in combination with the top and bottom finder will dramatically increase the profitability and timing used with this indicator. The rest of the examples that we're going to look at will replace the 20-period EMA with two of the lines from this indicator. You can find this indicator again by going to TradingView, selecting the Indicators panel, and searching for Best Holy Grail Indicator version 3, all in caps. Again, we're looking at the same 4-hour gold chart, but instead of having the 20-period EMA on it, we have the third and the fourth line from the Best Holy Grail Indicator version 3. The pink line is line 3, and the red line is line 4. Now, if we look at areas where these moving averages cross over, where the market top and bottom finder is signaling, you will see that the opportunities are insane here. Starting back in September of 2017, we have the market top and bottom finder already signaling. Here, it crosses under the pink line right at the top while the signal is forming. This is an incredible opportunity to go short, which again yielded great profit with very minimal drawdown should you have held to the next crossover area. Then, if we waited to go long again, we would have waited for a market bottom to form. We're looking for a highlighted red area. Again, in this area where it highlights red, we have a Best Holy Grail version 3 pink line crossover with the top and bottom finder. If you entered here again, you would see this was one of the best places to go long in this market, just before the beginning of 2018, yielding great profitability with very minimal drawdown again. Then, if we waited for our market top to form, as we did just after the beginning of 2018, we had another pink line crossover that told us to go short. Again, this would have yielded great profitability with very minimal drawdown. Despite being caught in a range, it was ultimately correct, and if one had the strength to hold during this whole ranging period, the profitability would have been immense. Next, if we waited for our signal to go long again, we would be looking for red areas to be forming while there was a price crossing over the pink or the red lines. Here you can see where it crossed over the pink lines. This was actually just a momentary retrace, and with proper stop loss and risk management, the losses here would have not been so large, and potential profit with a trade against the direction of the trend was possible. If we waited until a solid red line crossover, after red areas were already forming, then we would know that a market bottom was already forming, and we would have the trigger from the Best Holy Grail indicator, the red line, which is line 4. If we went long there, we would have caught the yearly market bottom. This method is so powerful that it works in almost every market. Here, we can even trade commodities. Here's the 1-hour chart for sugar from October of 2018 until August of 2019. Looking in October of 2018, we had the market top forming with the light green areas forming. Now, if we waited for the red line to cross over, where the green areas were already forming, that would tell us that an important market top was already forming, and we had the trigger to enter a short position when price crossed under the red line. If we waited for a market bottom to form, we would have not seen any red areas forming during this time. We would have only been alerted of another market top forming at the end of February 2019. Again, we have this green area forming, showing us that the market top is here, and price is crossing under the pink line, letting us know that that is a good opportunity to enter a short position. Knowing that we're in a market top and have a good entry for a short position, there is very, very, very minimal drawdown and very high opportunities for profit. Now, if we waited again to go long at a potential market bottom, we would have had a few red areas forming during May of 2019. While price was ranging in this area, it formed a few important market bottoms which the top and bottom finder found perfectly. If we use the red and pink lines from the Best Holy Grail indicator version 3 as triggers, we would have had a lot of great opportunities to go long in this area. If we entered at any one of these crossovers, we would have had a little bit of a drawdown, but it ultimately would have went back into great profit. Then we had yet another market top forming with a green area being formed and crossing under the pink line again. This was an incredible opportunity to go short on sugar on the 1 hour on June of 2019. Then we wait for a market bottom to form. Again, like clockwork, we wait for a red area to form, letting us know that we're in a potential market bottom in real time. Then we wait for the crossover of one of the Holy Grail lines to know that that's a good place to enter a long position. You can see at the end of July of 2019, both of these happened again, and we got into a long trade with great profitability and very minimal drawdown. For our last example today, let's explore how powerful this method is if you're just a crypto trader that's holding a spot position. Let's say that you're holding some cryptocurrencies and you only want to make a few trades every year just to protect your portfolio. Let's say in this example you have one Bitcoin, 10 Ethereum, and 20 Litecoin. TradingView is wonderful because it can show you the chart of your portfolio if you just enter it in the ticker section. You can see in the top left corner, we have 1 Bitcoin plus 10 Ethereums plus 20 Litecoins. The chart that we're actually looking at here is the value of the portfolio on the daily with candlesticks. Now, if we apply this same method that we have been exploring today onto this, we can actually see the best times to enter and exit this entire portfolio. This is how powerful this method is. You can see at the end of 2017, the market top and bottom finder was showing that a market top was forming for the portfolio and represented a great time to exit the portfolio. If we exited anywhere where the price was crossing over the pink lines, we would have saved ourselves a lot of headache over the next few years, while we exited with the greatest profitability that this portfolio had to offer. Then, at the very end of 2018, we had a red area forming for this portfolio, showing us that this portfolio was at its lowest possible value. Then we had a pink line crossover, as we did before, showing us that this was a good time to buy back this portfolio. Now we know that the portfolio was potentially at its lowest value, and we had a good entry signal to rebuy the portfolio again, where again this portfolio is 1 Bitcoin, 10 Ethereum, and 20 Litecoin. Then, just before July of 2019, we had a good signal that a potential top was forming for this portfolio and would have represented a potentially good exit to rebuy this portfolio at a lower price. If we waited for the green area to form, we would have seen that we were in a potential top of this portfolio. Then we had the pink line crossover, letting us know that that was a potentially great time to sell it. Let's just look at the percentage saved and gained if we had followed this methodology. Here, from the initial loss at the end of 2017 to the end of 2018, if we had exited our portfolio on the end of 2017 as suggested by this method, then re-entered it at the end of 2018 as suggested by this method, that would have saved us from an 80% loss of value of the whole portfolio. Then, if we re-entered this portfolio again at the end of 2018, until July of 2019, we would have made 175% gain on just that re-entry. And if this portfolio had not been entered and exited at all, the portfolio would still be down 45% from its highest value until this time. That's to say that by simply following this easy method by tracking our portfolio in this way, that would be the difference from almost tripling our money to almost losing half by just making a few trades every year. That concludes all of our examples today, and we hope that you've seen how powerful these methods are in combination for all kinds of trading in all areas of trading. In the Day 2 tutorials, we're going to explore even more examples of how to use Top and Bottom Finder by Absidy LLC in more ways that will generate even greater profitability and lower drawdowns. Please join us tomorrow. Thanks for watching today.